We will begin the call with results highlight, and then we'll follow up with an interactive Q&A session. On the earning details, hope you've received our financials and the press release which was sent out yesterday. They're also available on our website. For the first quarter FY21 ending June 30th, 2020, the company recorded consolidated total revenue of 582 crores for the first quarter, as against 513 crores for the same period last year, reflecting an increase of about 13.4%. The net profit for the period on a consolidated basis was 122 crores as against approximately 143 crores same period last year, showing a decline of about 14.5%. The increase in revenue was driven primarily by export formulation business. Our supplies were driven by pandemic-related requirements, which were lower in margins. We also had challenges in the domestic oncology business, primarily due to lower hospitalization due to COVID situation. In spite of the lower margins during the first quarter, the company is confident of its business for the remaining part of the financial year based on the order books and the earnings outlook. The company's guidance is a growth of over 25% in its earnings for FY21 compared to the prior year. We've also given a segmental revenue split in a press release. At this point, we'll pause and we'll take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Ravi Dharamshi from ValueQuest. Please go ahead.
Yeah, hi, good morning. Thank you for taking my question. You have guided for 20-25% growth. Just wanted to know if this includes the Canada Revlimid settlement, and if that is the case, then removing that, what would be the guidance? If you can throw some number on that.
Ravi, the settlement terms of the Canada are confidential. Okay, so I can't get into the details of that. I think we already publicly stated we assumed all the outlooks, and our growth is 25%. I can't do it.
But the settlement is part of that growth.
I cannot get into the details of the settlement. I think I've said two statements. We have settled we settled our litigation with Canada, and our earnings guidance is about 25%. I think that's it.
Okay.
That's all I can.
So if you can just throw some light on how is the domestic hospital sector reviving, and has the growth started picking for us? It's been a very challenging last 3 months, Ravi. I think April was really bad. I think May things got better. June was very good. And July, I think, came off. It was not as strong as June, because I think June was a lot of pent-up demand was there. So I think that's why we got very good June. And then things have settled down, dropped a bit in July. I think, as I said in my last call, I think things are, every month is a learning, and it's very difficult to, predict how things are happening domestic. I think because our portfolio is mostly onco-driven, and onco is, is the most profitable segment that we have in domestic. And we've been hurt hard by lower hospitalization. And I'm hoping things will get better. I think, our sale is driven by the big metros, Mumbai, Delhi, Hyderabad, Bangalore, Chennai, and, Chandigarh, Calcutta. They probably make up most of your sale. And I think these cities have been the hardest hit. Most of these cities have been the hardest hit. And that has really impacted our sales. But I'm hoping things will ease up in the next 2-3 months, and that people will come back. And I think we should see a rebound in the domestic sales. But it's been hard. I think there's no other way of putting it. Yeah. This last question from my end. What is the status on communication with FDA on Revlimid?
Revlimid looks good. I think we've answered all the questions, and we believe that we should get an approval. We have a target action date now in December. Okay, so I think if all goes well, I think we'll get the approval in December. But I can confirm that we have a target action date in December.
Thank you. All the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Amar Maurya from AlfAccurate Advisors. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, you had seen a phenomenal growth in US geography. What are the drivers for that? In that, what had done well for you? Capoxicon, Tamiflu, Doxil. What has basically driven the growth for you in the US formulation business? If you can just highlight.
I think Tamiflu did well in the past, but Tamiflu is not contributing that much to the margin now because there's been a drop in the realization that we had in the past. So I think that's on Tamiflu. I don't want to get into the profitability of each product, but broadly, I think our earnings are driven by 3 or 4 products where we are very strong. I think I've said this in the past. I think Capaxone is very important to us. Doxil is very important. Lanthanum carbonate. So lanthanum carbonate, we are the only generic in the market. Doxil, we and Sun are the major competitors on that. Our partnership with Reddy's. Capaxone, it's us and Ando. So I think these are obviously they are the key products in the United States.
And sir, in export formulation, if you can share what would be the contribution from US, LATAM, and Canada?
We're not doing a split. We're just doing a general we call it export. Right now, I don't have the numbers, my friend. I think I'll just come back to you. Whether we want to do a split. But as of now, if you put me on the spot and ask me, I don't have the split. But I'll just come back to you on that. Yeah.
Sure.
Thank you. The next question is from the line of Anuj Momaya from ValueQuest. Please go ahead.
Yeah. Thanks for taking my question. So you have in your press release mentioned that your margins are impacted both in the domestic and the international formulation business. So can you share what has impacted the margins in the international formulation business as well? Because domestic, so you said it's basically driven by lower oncology sales, but what has led to a
I think I kind of covered it, but I'll sort of reiterate it again. I think a good amount of the sale has come from pandemic supplies, and I think as you guys are aware, we have 2 pandemic products. So there's in certain countries and certain markets and certain customers there's been some stocking. So we have 2 strong pandemic products. We have oseltamivir and chloroquine. So I think these are the 2 major ones. So these are relatively high revenue but relatively lower margin. So compared to our traditional business, that's why you've seen an increase in the top line. But the commensurate increase in the margin was not there because the relatively it is more competitive. So I think that's what I was trying to convey.
So the API sales boost that has happened is also due to the supplies of chloroquine API, or there's some other thing which has led to
a mix of both. I think we're not doing I'm not getting into a product split, but I think the buoyancy that you've seen the export formulation and API sales have increased dramatically from our base level compared to the previous quarters, and they're primarily driven by both of these products.
So going forward, we believe the margins should come back to the previous levels, or how do we look at the margins?
It's a sales mix that drives it, no? I think if you have more orders of these, then obviously the margins will look low. If you don't have these orders, then obviously the margins will look high. So it's the mix of the sales mix. If you have more of these, then obviously the margins will be lower. If you have less of these, then the margins will be higher. It's only whether you're having an order for this or not that will determine how the margin mix is going to be.
Okay. So secondly, on agrochemicals, what is the update on the Coragen filings that we have on the court case and the approval from the insecticide board? Any update over there?
I'm hoping for some good news on both counts. I think on the court case, it's being litigated as we speak, so we're waiting for an outcome on that. And on the regulatory approval, I think we've answered all the queries. We got one set of queries recently, and we have answered that also. We're hoping, I think, again, these things it's very difficult to, come up with a timeline during COVID because, even in government also things are a bit slow. But I'm hopeful, I think in the near term, in the near term we'll get the approval on the product, and also, we're also hoping for a positive outcome in our court case. So I think these two will drive some clarity on that product.
So what is the date of the court case last that is updated to you?
I think I don't remember the next date of hearing, but it's ongoing. I think it's scheduled. I think if you ask me on the spot and say which date, I don't recollect, but I think it's in the. I think it's going on. I think I don't recollect the date, my friend. But I think it's shortly. That's all I can say. Yeah.
It's an ongoing process also.
You get a hearing and then they post it after a week or 10 days. That kind of.
Yeah, sure. So any more filings you have done in agrochemical? I think you have indicated 2 filings. So after that, any further filings you have done in this?
No, not that nothing to update at this time.
Okay. And lastly, sir, my last question is on this US. What are the filings that we're looking for? Because we have always indicated 4 or 5 filings only. So any filings that you have done in the last 6 months that
I think we had one good filing. We had one product called trabectedin that we filed. It's a nice, interesting product to do. The sales are like about, I don't remember the sales. I think it's like below 100 million, if I'm correct. And we are one of the first to file. There were 2 first to filers. We have a partnership with Sun on this product. So that's a very good filing that we had. And I think, let's see how that goes. And there's us, and there's another Chinese company that filed. So that's I think that's probably the most interesting filing that we did in the last 2-3 months. So I think that's probably an update that I can give at this time. In terms of new filings and all, we're working on more interesting things. But I think because of COVID, our R&D efficiency has also dropped a bit. So we have to see how that plays out. But we have a good, healthy pipeline. But I also like to, caution that, things are not as easy as what they were pre-COVID in terms of, productivity that we used to enjoy before COVID. Okay?
Okay. Thank you, sir.
Okay. Next question, please.
I'll come back in.
Yeah, sure.
Thank you. The next question is from the line of Kashyap Karthik from Cable Tree Capital. Please go ahead.
Hi, sir. This is Kashyap. So, couple of questions. The first question is the 20-25% growth in earnings that we talked about. Does this include, does it include sorafenib or everolimus or lapatinib earnings? Because, again, that was confidential, so we don't know what to include in this or not to exclude in this. Not any particular molecule, but any of these 3 molecules, are they included in the earnings or not really?
Sorafenib is not included. Everolimus is not included. Lapatinib also we're not included in the guidance. We're not including any of the 3 in the guidance. We are assuming based on the order book that we have.
Okay, cool. So the second question that I had was, so 1 year back we kind of said, I'm sure it's as frustrating to you as it was to us. You said we have a goal date from FDA, same target action date, or maybe there's another term called goal date. Right, exactly 1 year back that we said that, and then we got more questions to answer. I mean, if you could just throw some light on what kind of questions, sir. I mean, maybe we'll not understand it, but we just going against the moving target, saying this is a goal date. No, right now it's December. Again, it's June. I mean, thank God it is March 2022, so we have some runway. But still, target action date after giving a goal date, again question. So, how does this process work, sir? Actually, what if December pushes to May again, right? So that's the question that I have in my mind.
See, my friend. We answer the questions best to our ability, based on the information that you give. If they have further questions, it's their prerogative to ask. I mean, that's the nature of the business, my friend. I don't have an answer to your question, honestly. I think you answer the best way that you know, and you satisfy the regulator. If they're not satisfied, then they come back with more questions, and you go back and you answer again. And that's the nature of the business. I think that's the best way I can answer that question.
Sure. Thank you.
Thank you. Next question, please.
Thank you. The next question is from the line of Nikhil Mathur from Ambit Capital. Please go ahead.
Hi, good morning, everyone. I just have one question on the domestic business. Now you have mentioned in your comments that the oncology business was under some sort of pressure, especially in April. So two questions there. Has June and July exit run rate been substantially high, and can you compare it with pre-COVID levels where we are in the onco? And secondly, if not onco, then what has really driven this quarter-on-quarter growth that the domestic business has witnessed in this particular quarter?
We have some good couple of new launches. I think that has helped. But having said that, it's not been, to be honest with you, I'm not happy with the way it's taken off, because we are very disappointed with the amount of hospitalization that has happened. I mean, in terms of our products only work if you go to the hospital, isn't it? And because of fear of COVID, a lot of people are not coming to the hospital. Are we running at pre-COVID levels? No, we clearly are not. I think, every month has been a learning, my friend. So, I've been fairly candid about it. I think every month we're just learning something new. And are we at 100% of pre-COVID levels? No, we are not. Are we at, let's say, 75% or 80% of pre-COVID? I think the experience of the last 4 months shows me that that's where we are at this time. Again, guys, I can only tell you what is going on. Again, I don't have a crystal ball to tell you how the next few months will plan out or how the pandemic pans out. But this has been my experience in the last 4 months. I think that's the best way to answer that question. Okay.
And just to follow up on the domestic business, so as far as the total number of launches are concerned, so there has been some bit of guidance, right? And on an annual basis, there will be 6 to 8 launches that will keep happening over the next 2 to 3 years. So is that plan on track, or that also?
That has gone on track. It has gone on track. I think in terms of launches, I think we are looking positive. I think I believe we can launch about 10 to 12 products a year, and I think that's on track. And this year has started reasonably well. We had about total about 5 launches in the past few months. So I think we are on track. I think we're in good shape on that. Yeah.
Okay, sure. Thanks a lot.
Thank you. The next question is from the line of Anand Bhavnani from Unifi Capital. Please go ahead.
Thank you for the opportunity. I have one clarification and then 3 questions. The first clarification is the guidance of 25 is on revenue or profit?
It's the guide on the press release says profit.
PAT.
Yes.
Okay. Now coming to the questions. So 3 questions. One is, there's this recent spate of executive orders signed in US which allow people to import drugs from other countries if they are of similar quality. So does this in any way affect prospects of Revlimid for us? Is the Revlimid price in Europe or elsewhere in the world cheaper, and can people import it? If you can comment a bit on that.
Okay, let me answer that question. Again, I don't have clarity on how it actually plays out, so it will be very premature to comment on it. But I think my answer to that question, instinctive answer would be that, it's not a straightforward product that you can import and start substituting, because there's a REMS program that you need to have. The way the product is dispensed, you need to have a process where it's dispensed. It's not, you need to go through a counseling session where it's dispensed. So it's not so easily substitutable as, like another product. I think that's probably my instinctive answer. But again, wait for it to play out. There's a lot of, other factors. At this time, it's really premature to comment about it.
Okay. Secondly, in terms of our market size in US, so the $7 billion market, can you give a sense how much of it comes from a state like California?
I don't have an answer to that question. I'm sorry, I don't have an answer to that question.
Okay. Thirdly, with COVID, we have seen a lot of comorbidity. Now, I guess about 1.5 to 2 lakh patients form the overall market of Revlimid in US. So, in your assessment, do you see over next 2 years a lot of comorbidity among potential users of Revlimid, current users, and the market might not be as big as 7 billion, it might collapse by a billion or two if COVID were to stay here for a while. Is that a realistic threat, or what's your assessment of the situation?
My friend, I can't answer that question either. I have no way. I'm sorry, I just simply can't answer that question. I don't think I'm even, I'm not an expert on this, so I can't answer that question. Sorry.
Sure, sir. I appreciate it. And lastly, in case of US, the state of California has deemed all the settlements anti-competitive, and they are presumed to be anti-competitive. So, any sense on if our settlement with Celgene is being considered that way, and does it apply to us because our settlement was already done? So, is it prospective in nature? If you can comment a bit on that.
I think my understanding is that the deal that the settlement that we had was done in the past, so it cannot be retrospective in nature. I think that's my understanding. I think that's what I was told.
Thank you. Anand, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Kunal Randeria from Antique Stock Broking. Please go ahead.
Yeah, hi. Good morning, everyone. Rajiv, a few quarters back, you had given a guidance of around 1,400 crores of PAT for FY22. So does that still hold, or has the situation changed on the ground?
It's linked to Revlimid, my friend. It's only. I think the guidance will only. I think I'll be closer to the. Our expectation is that we'll make that much money, but I think a lot of it hinges on Revlimid.
Right. But then, let's say you do maintain the Revlimid timelines, and even, your expectations play out. Would you be recognizing the entire profit of Revlimid in that, fourth quarter of 22? Some of it will then have to flow to 23.
I'll make that call at that time, my friend. I can't predict what I'll do in about a year and a half. I think when we're closer to the launch, I think we can have a discussion about this. I think it's too. Let the market formation happen. I think then we can discuss about this.
Sure. And my second question is on your other markets where you are trying to expand, markets like Brazil, Canada. So if you can just share how these markets are performing, how the profitability has moved, and how much it can impact the consolidated margins going forward.
I think these markets are doing really reasonably well, and I think these subs are contributing strongly to our earnings, and I think I'm happy where we're going, and I think we have also given a guidance that we want to broad base our earnings as much as possible. Now, non-US is bringing in about 10 to 15%. Depends on the quarter, of course, but nearly 12 to 15% of our earnings. So I think our idea here is we're trying to do two things. Diversify our non-US business to almost 15 to 20%, and also try to bring up domestic sales, which is around 20-22% to almost 30-35%. I think we were able to achieve both these outcomes. I think we should have a more diversified stream of revenue and bring down the volatility in our earnings. Okay.
But can you share some numbers? I mean, revenue numbers, some whether they're profitable, these markets, anything?
Profitability by market, you're asking me? Is that what you're saying? That's
some
data we're not doing, my friend. I'll come back to you on that, because let me assess and I'll come back to you on that. As of this time, I don't have those numbers, but let me assess and I'll come back to you. Okay.
But the question is also surrounding more of the subsidiary numbers and the non-US, Kunal.
The bigger markets, say like a Brazil or a Canada.
I think we'll come back on that. I think we have combined all the numbers. I'll come back to you on that. Okay. And let me come back to you. Okay.
Thank you. We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Mayank from Axis Mutual Fund. Please go ahead.
Hi, sir. Good morning, Rajiv. I just have one question. I wanted to know if you feel there is any structural change happening in the U.S. market, either on price side or product opportunity side, because of which, and any implication of it on your overall research programs, R&D locations, or having more or less firing towards U.S. In the past, we had been pretty vocal about how you think about that market. So, given what has happened in last 3 to 6 months time frame, I would like to hear your thoughts on the U.S. market, if there is any change, and with regards to that, is there any change in your own strategy or expenditure budgets?
Okay. In terms of U.S. market, I think things have been fairly stable now because there's been a lot of supply chain disruptions. I think products where you had very good market share, I think you've seen a lot more strengthening of the market share because a lot of people are prioritizing their production priorities. A lot of people are dropping out of their tail brands. So where you're very strong on one particular product, you've seen an improvement in the volume. Okay, and the pricing has been fairly stable. Okay, that's on the US market. The second question you had was what has COVID done in terms of your R&D pipeline?
Not COVID. So with the US market being what it is dynamically, what is that? Is there any change in your thinking towards US markets or any change in your R&D budgets towards US market? Not COVID specific.
Okay. I think in terms of strategy and all, nothing much has changed. I think we're fairly sticking to what we always do, which is focus on the niche products and try to do a multi-market approach so that we can get better bang for our R&D. That strategy itself has not changed, but I think a few minutes ago I commented that our R&D productivity has dropped compared to pre-COVID time. So that has become a bit challenging, but hopefully I think once things settle down, things will get better. But in the near term, I think my sense is that the R&D turnaround is not as efficient as what it was in the past. Because even to get a slot in a CRO to do a trial has become difficult, because of COVID situation. So things are not as simple as they were in the past.
And sir, anything on the manufacturing strategy in terms of API, more APIs or less APIs going forward? Or that is unaffected, that is unchanged?
I think we're able to run reasonably well. I think we're able to do more revenue than we did earlier. I think, but we just prioritize a lot of things. I think, we are focusing on the products where we are doing well. I think that is, and I think there's a lot of efficiency that we brought about. But it's challenging. I mean, are we working at the same level of productivity that we worked in pre-COVID? No, possibly. I think we're able to maximize revenue because of the product mix and all. But I think there are a lot of challenges, people getting sick, and then we're doing rotations and alternate days and a lot of other logistical challenges. But we're able to deal with it. I think we're able to come out and work, but it's not as smooth as it was in the past.
Got it. Thank you, sir. Stay safe. All the best. Thank you.
Thank you. The next question is from the line of Kartik Mehta from Clay Capital. Please go ahead.
First is on Oseltamivir. While the realizations there on account of competition can be under pressure, is it fair to assume that given the pandemic, the volumes, maybe not just for you but everybody in this flu season, can be at least 10-25% higher than previous years? I'm just talking about the volumes, Rajiv.
I have no idea, Kartik. Honestly, I have no idea, because how a flu season plays out in a year is very difficult to predict. So
the commentary which we hear from people concerned in the US, if more people have to take the shot, would you assume that the nature of the business is such that people who have volumes are ready, inventory ready, they can take first more advantage over here?
Kartik, what I can tell you is that we are prepared. If there is a big order, if there is a big supply need, we are ready. I think that way we are built up. I think we have 2 production sites. We have one production site in India and we have one production site in the US for Oseltamivir. So, and even if the Buy America kind of rule kicks in, I think we're in good shape.
Yes. Yes, I was just actually referring to that.
Yeah. Just let me answer your question. So that asks that in terms of that preparation, I think we are in good shape. Regarding demand and all, Karthik, I don't want to speculate because how every year works is it's all nature, Karthik. So prediction of flu season, the strength of flu season is your guess is as good as mine. Yeah. Okay, but all you can do, what you can control is only the fact that you're prepared. I think beyond that, you can't control anything else. Okay? I'll go to the next question, please.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investments. Please go ahead.
Yeah, hi Rajiv. Congratulations on a good set of numbers. Yeah, Rajiv, my question is on the agri business. Can you just elaborate on how many registrations we have done so far, and as far as the current litigation as far as the current status of the current molecule, if you can give us some idea on the addressable market opportunity in the domestic market, if you can just throw some light on that.
In terms of the products that we have filed, we did a lot of, I think Rajesh will answer on we have two types of products. We have the commodity products and then we have the niche products. Niche products we filed so far, 3 products we have filed. And the market size of these 3 products is, I think, around 2,000 crores, I think, where we are attempting to be the first generic. And regarding other filings, we have a lot of other commodity filings. I think how many we have, Rajesh?
Yeah. So I think Mitul, as Rajiv was saying, there are 2 aspects to the registrations for agri. One is you take these very niche and high value products like what we call it as a 9(3) registrations. Okay. These take time, but they have a high value. The one that we already said in the public domain is the product called CTPR. Then you have the second set of products which will come under 9(4) registrations, which we have done more than half a dozen, already. We have received the registrations. We don't highlight that because these are more like a Me Too product, because when you are going out in the field, you need a basket of products. So it's a combination of the high niche products as well as the Me Too products. Okay, so that's broadly our strategy, and so this is where we are. So we have a few in the pipeline which are also high niche.
Thank you. Next question, please.
Hello?
Last question.
Yeah.
Yeah. Are we confident of launching the product in this season, in this Rabi season?
Subject to getting the market approval and subject to the court case, yes.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question, Rajiv. Rajiv, on the API business, I'm sure I probably missed a comment. Was the supply spike in the quarter, was it all COVID related or just general stocking up on our regular molecules? And with what we've seen in the API business in general across industry, how does the API business look for us now going forward?
It looks good, Nitin. There's a lot of stocking quantity that is happening among for our regular products. Some of are related with pandemic and some just increase in market share on certain products. I think those are driving the earnings of the API business.
But this is more like FY20 story, 21 story for you, or you see this is a story which, given the way the market dynamics are, could have legs for you as far as the API business, pure API business is concerned for you?
I believe some of them are one-time because pandemic supplies tend to be very large orders which are one-time. But the base business also has improved dramatically, Nitin. It's 2 things. The 2 aspects to the growth. There is the pandemic order portion of the book and there is the base business. I think the base business increase looks like it's going to sustain for a little bit. And the pandemic supplies are all one-time in nature. No? So I think once you do it, then you're done. Unless there's a repeat order, then you get into a stage where you could run through a few quarters where you don't have orders. But so I think that's a mix that we have.
Okay. And secondly, on the Agrochem business, in a say 2-year or 3-year view, what is the broad, you have any numbers in mind that you are running with as a goal for this business, or in terms of filings, is a broader strategy, India, domestic? Any more color on that with a more 3-year view on this agrochem business in terms of how you see the scaling up?
Yeah, if you take a 3-year view, I think we are hoping that India domestic should come to a decent stage, and we also should commence our exports. So I think my idea here is that this business should contribute about 15% of our India, our whole consolidated balance sheet. 10 to 15% is the expectation.
Thank you. Nitin, we would request you to please come back in the question queue. The next question is from the line of Shashank Krishnakumar from JM Financial Institutional Services. Please go ahead.
Hi, thanks for taking my question. Can you just write the split between domestic and on
Shashank, we would request you to speak a little louder, please. We are unable to hear you.
No? Yeah. Hello. Can you just provide the split between the domestic and the third-party sales?
Okay. You are breaking up, but I think what I hear is you are looking for the split in the domestic business, right?
Correct.
Okay, so the way we're categorizing, let me give you a broader numbers. For the onco business, we had about 78 crores for the quarter. Okay. And we are pulling the next category as a non-onco, which includes the C&D and also the pharma specialties. Both of them together around 25 crores.
Okay.
And then the third party formulation is the balance. So that is also roughly around 22 crores.
Okay. Thanks, sir.
Next question, please.
Thank you. The next question is from the line of Yukansh Jaswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. So one quick question on the oncology side of the business. So of late, we are seeing several of our domestic peer companies also being very bullish on the oncology product basket, and a lot of them are putting substantial investments into it. So any thoughts from Natco as to how do we see this impact the overall market going forward, or what thoughts do you have since we are already an established player in oncology?
So is your question that there's a lot of focus on oncology and a lot more competition in oncology? Is that the question?
Yes.
And what do I feel about it? I think, we are one of the strongest players in oncology, and I think we have done well in that business. And in terms of competition, I mean, we are in generics, so obviously you're going to see competition in a lot of the portfolio. But I'm happy with how things are, and I think things are stable. I think we're doing reasonably well. I think the only challenge in onco that we have seen are more than the competition, there are more extraneous issues that we have had. One was DPCO last year, and this year is COVID. I think once if you sort of go past these two issues, I think it's still a good, solid business for us. I'm not overly concerned about competition because you have a good name and you have a good portfolio and you have good launches. I think you can do well in this business.
So just to get in more details on oncology side of our business. So as Natco, what is our strategy going forward for oncology? Are we trying to add in more product basket, like add more onco products, or there is some other strategy that we have for onco? How do we plan on meeting this competition going forward?
We have a good pipeline, my friend. I think we have a good pipeline of products. And I think we are having good R&D, and I think we're coming up with new ideas and new therapies. I think that's how we're going to grow. And I think our specific focus is on only doing chemistry products. I think we have, as a strategy, decided not to do monoclonals. So I think our growth is driven primarily by chemistry products.
Right. And lastly, are we seeing any significant price erosion in oncology?
Have you seen more price erosion than what has already been seen in the past? No. I think things are fairly stable now, I think. Okay.
Understood. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Susmit Patodia from Motilal Oswal Asset Management. Please go ahead.
Hi, sir. Good morning. 2 questions. One, why would you want to give out 25% EPS growth guidance in times like these, especially in the business that Natco runs, where there are a lot of ifs and buts with regards to court ruling? What are the intents behind it?
My friend, I usually give a guidance based on, I refuse to give a guidance in Q1. Typically, we give a guidance. We always say that, based on certain assumptions, that this is what we believe will happen. I think the reason I gave a guidance now is I'm more confident about the guidance. That's why I gave a guidance. That's all. I think.
And my second question is, you said Agchem should reach 10 to 15% of revenues in 3 years. So would it be fair to say that your asset base, which is currently at 160 crores, will also tend towards that? Or will this be a higher ROCE business?
See, how it will actually play out is something that I don't know. It comes back to your original question because they're all linked with court cases and all. So, see, the gentleman
just in terms of an asset base.
Sorry, say that again.
In terms of an asset base, so currently it's about 160 crores in the segment.
Do you see an increase in asset base, you're saying? For now, no, because we're just completing whatever capex that is there. I think what we'll do in future, I don't want to make a judgment at this time. But I think with the present asset base, with a small increase, I think we'll be able to get that outcome. But see, let's see. I mean, I'm driven by opportunity. If there's another opportunity, we'll probably invest more. So.
Okay. Thank you. Best of luck.
Thank you. The next question is from the line of Sri Hari from PCS Securities. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the other expenditure. I mean, we have seen most of the peer set being able to rein in their other expenditure significantly. So has it played out accordingly for you, or do you see more of it coming in the following quarters? And secondly, on the profit share, are you disclosing the number, or at least qualitatively we can give some direction? Thank you.
Regarding expenses and all, we've seen a drop in expenses. I think if you compare on Q1, there's a drop in expense. I think the drop in expense is not by any design. It's just because of pandemic. What has happened is the travel has dropped. Your reps are not going out, and those expenses have dropped. So, and just it is the nature of the environment. And regarding what was the other question you said? Regarding the split of the profit and all. See, I stopped doing it for strategic reasons. Then you're actually telling your competitor how much money you're making on each product, and then you're just opening yourself to be a sitting duck to be attacked. I mean, I think I had a change of mind after recently, because then you're just opening yourself for. Sometimes you have to be guarded about how much. You have to be obviously forthright about what you're doing and how you're making your money. But again, too much detail also has a way of hurting you. So I think we're not doing a split for that reason. Okay.
Yeah, that's why I asked the qualitative, at least if you can give some indication.
I think we've clubbed it in one group, my friend. I think I decided to club it from this year in one group. But I think I've answered the question indirectly where I said these are the primary contributors. But product-wise, I don't want to do it for comparative reasons. Okay?
Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Sumit Mehta from Vallum Capital. Please go ahead.
Hi, sir. This is Kunal. I have two questions, sir. I just wanted a clarification. So, for Revlimid, we have two major indications where the bulk of the revenue for Celgene comes, one which is multiple myeloma and MDS. So, when I look at clinical trials, we see at least 1 to 2 trials being conducted for Revlimid along with some other drug for various oncology and autoimmune indications. So, my question is that once we get an approval, does the approval allow us to supply Revlimid for all of these indications, or is it just for multiple myeloma?
To be honest with you, I think whatever indications that are stated, I think which are approved today, I think we have clearance for that. I think that's my understanding. To be honestly, the question you have asked, I don't have an answer to that at this time. From what my understanding is that whatever indications which are approved, I think we are allowed to sell. I think that's my understanding.
Sure, sir. And second question I have is on Copaxone. So for Copaxone, we had visibility for volumes till I think the end of this calendar year. So and now that you was I think August, November, maybe October is the time when you would want to when Mylan would renegotiate the contracts, renew the contracts for this product. So any indication for next year maybe something?
Do I have an indication about how the volumes are in for the next year? I don't have an answer to that question. Mylan handles it, so it's better directed at Mylan than us. I think they handle the strategy, so I think I can't answer that question.
But safe to say that so now that reduce is delayed beyond FY22, we would have more room for keeping the volumes at least, or at least maybe even growing it beyond the 30% share.
When Reddy's will come, I have no idea, my friend. So I think that's something that you ask Reddy's. Regarding our market share, I think we've been stable. I think we're doing well with the product, and we're doing over 30%, as you rightly said. And we're happy with the situation that we're in.
The last question I have is on the agrochemicals product. So I'm sure the court case will have its own path, but when we speak about the approval from the CIB, what review which we have got from other agrochemical companies is that the whole process of getting a 9(3) registration is very, I would say, time consuming, because the file has to move through multiple departments and there is a lot of bureaucracy involved also in the process. So what is giving you the confidence that you will be able to get your file approved in maybe 18 months time frame? Because I think between the time we made the filing and maybe next 6 months, it's around 18 to 20 months now. So generally it's a 3 to 5 year process.
No, I disagree with you, my friend. I think typically it takes about 12 to 18 months. I think we filed it last year. So I think, I don't remember the exact date. I think we filed it around August or September of last year. I don't remember the date. So I think we are within the timeline. Things are moving much faster in CAB now. They're not, it doesn't take that much time. I think we believe we have answered all the queries. And I believe that, the approval comes soon. But again, because of COVID, things have been, obviously been challenging for everyone, as you know. And as I said in our commentary, I think we're hopeful that we'll get the approval soon. I think, I think that's all I can say. I think, but I think that's, I can only tell you based on what our gut instinct is. But how it actually pans out, I think only time will tell. So, but and on my end, I can only tell you what our feeling is, that we have answered all the questions, and we believe, I think it will come through. But again, I told you a few minutes ago that the launch and all is subject to the approval and the court case outcome. I think you have to be aware of that. Okay.
Sure, sir. All the best for the future. Thank you.
Thank you.
Thank you. Due to time constraints, I would now like to hand the conference over to Mr. Rajiv for closing comments.
I have nothing much to say. I mean, if anybody has any question, I can take one more question. Otherwise, we can close the call. Any other questions? Please let me know. Yeah.
Sure. We have one question from the line of Nikhil Upadhyay from Securities Investment Managers. Please go ahead.
Yeah. Hi. Good morning. Thanks for the opportunity. Rajiv, my question is basically like if we go back like last year or around, our idea was that the subsidiaries, which are the Canada and the Brazil subsidiaries, will do a lot better and will start contributing towards the profitability. Now with the Revlimid settlement, how do you see that path to profitability? Does that get extended, or do you still think we have good enough products to improve the profitability from here?
I think we have a very good pipeline in our subs, and I think we are doing well. And I said a few minutes ago that the subs are contributing a significant amount of earnings now. And I think I said, I think it's almost contributing almost in the 12 to 13% range. So I think we're doing well with the sub. I think, do we have enough traction? Yes, of course we do. I think we have a good pipeline. I think we have a lot of interesting ideas, and I think I'm very optimistic about the future.
So when we had discussed last time about the improving contribution, were you including Revlimid approval or launch at an earlier date, or has there been any change in the thought process post the settlement of Revlimid? on the profitability side or the improvement of the subsidiary side, especially on Canada?
I don't understand your question, Nikhil. Can you repeat?
So if we go back last year, we were in the court case and there was no settlement. So when we were discussing about the improving prospects from, say, Canada, and at that time versus now when we have a settlement, so when we were discussing the improvement of the performance of subsidiaries, say, in Canada, were we building in that there could be a potential launch of Revlimid, because Revlimid Canada is a big product. Now with the launch, does the pipeline of improving performance or gaining traction and scale gets extended, or how do you see the thought process has changed over post this settlement, or do you still believe that earlier itself we were not building in Revlimid and without that itself we were building in a good pipeline? Hello? Hello?
We would request the participants to please stay connected as the management line got disconnected.
Hello?
Yes, sir, you are connected in the main call. You can go ahead, please.
Yeah.
So, should I repeat my question, or you got the question? Or?
I got disconnected, Nikhil. So I think what I'll do is I'll see. Basically, I'm bound by confidence. See, what does a settlement do? Let's break this down. A settlement gives you a certainty of launch. Have you achieved certainty of launch? The answer is yes. Is settlement good for the company? Yes. Does that give you certainty of launch? Yes. I think that's the best way I can answer. The terms and all, I can't get into it because it's bound by confidentiality. I think that's the best way I can answer that question, Nikhil. Because of the way we are. Okay.
Sure. And just one last thing. Now, so on the domestic part, the domestic therapy segment-wise, now, with COVID, what we have seen is that our focus was always on being on the specialty side, and we were concentrated on one specialty, and we've grown and done good job on that in scaling it up. We were doing on the diabetes and cardio, and I think it was still too early, and COVID hit us. With the crisis, what does that now make you think that probably we need to diversify or increase our presence in more therapies in order to make the domestic business more stronger and the cash flows or the operation ability on the domestic side to improve? Do you think that need is more that has to be accelerated faster, or would you say that we will still continue the way we were thinking earlier?
No, I think I'm acutely aware, Nikhil, that we need to diversify our revenue base. I think, see, the way Natco has grown is that we have always made these concentrated bets. And I think that's the nature of our business. That is one. The second part is, I think we continue to make these concentrated high-value bets. At the same time, we're also trying to expand our portfolio, adding more geographies, doing agrochem, adding cardio, diabeto, and other segments is also part of this diversification. See, one need to understand is that we're trying to do this organically. We're not trying to do it by buying something, isn't it? So which takes time. And I think to answer your question, I'm very much aware of this, and I think we want to bring down the volatility of earnings. I think that has always been my stated goal. I think, but I think to execute something like this, the benefit of that will take about 2 to 3 years to play out. I think we just have to be patient. Will it happen now in the next quarter? Probably won't. But I think, do we have a vision that this has to be done? Absolutely yes. And am I aware of this? Absolutely yes. But it takes time. That's all it is. And I think, especially, we have been very conservative. We never bought anyone or did any inorganic growth. I think our idea has always been try to do it with the resources that we have with our own niche ideas. It takes time, but my view is that over a period of time, you'll see the benefit of our diversification as well. Okay?
Thanks a lot.
Yeah. Anything else? Any other questions, guys? Could I conclude?
Sure, sir.
Yeah. Thank you so much, everyone. Yeah. Bye-bye.
Yeah. Thank you all. Have a good day. Bye-bye.
Thank you. On behalf of Axis Capital, that concludes today's conference call. Thank you for joining us, and you may now disconnect your line.